Happy Finance Friday everyone, I'm Tom and this is Tom's Money Magic. Today I'm going to be explaining what a growth stock is. If you haven't seen one of my last two episodes, over the next couple of weeks I'm going to be explaining what different types of shares are. And I'll leave links to the last two episodes in the description. So growth stocks are shares of companies that are growing in value very quickly. Growth stocks are usually given this name depending on the percentage of growth year to year. The minimum percentage that a company would have to grow year to year to be considered a growth stock changes over time because each year the average growth for companies across the whole stock market may change. At the moment, a growth stock may go around 15 to 25% year on year. So that doesn't mean it can't go higher, but that's just around what growth stocks will do at the moment. And I'll give an example of one that does go higher than this later. You should also keep in mind that growth stocks will eventually stop growing quickly, as they can't grow quickly forever. They may drop down to around 10% growth per year, but it would be hard to maintain that 15% growth year on year for a long time. Growth stocks are most likely to be newish companies that have only introduced themselves to the stock market recently. In order for them to grow so fast, they will usually not give out any dividends because they need all their profits to go back into the company to help it grow further. These growth stocks are usually companies that are coming up with a new product or a new idea or new software, as it's hard for a new company to grow quickly in a market where there's already big companies that can mass produce the items. These stocks are a lot riskier than the blue chip stocks that I explained in my last episode, as they can fall in value just as quickly as they can rise in value. The example that I hinted at earlier was Afterpay, as during the first wave of the market falling due to the pandemic, Afterpay reached a low of $8.90. But over the next 11 months, they grew up to $151.92, which is over 1,100% increase. Afterpay is an example of a company that came up with a new idea, or at least implemented a new idea. They were the first major company in Australia to introduce the up-and-coming idea of buy now, pay later. That's all for me today. Thank you for listening. Please hit the like button down below and subscribe for more content. Also, feel free to check out my website if you haven't already. See ya!